The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it seemed like the gift that keeps on giving on Monday in the grain trade after the USDA reports Friday that seemed to give the corn, soybean markets, even wheat a little bit, some bullish momentum. That continued on Monday, especially in the soy complex. Hogs were higher, cattle were under some pressure, strong moves in crude oil, a lot of things to take a look at here as we continue to keep our eyes on these markets and kick off a new week. Joining us, John Heimberg with Total Farm Marketing. John, good to catch up with you. I know both of us are in mourning after the Packers loss on Sunday. Probably a sore subject to bring up here to start. But on the flip side of that, I guess we could be happy for farmers that the gift keeps being given here, it seems like, with a continued good, strong grain rally led by soybeans on Monday, John.
Yeah, good follow-through day, at least after Friday's price move. And, we'll continue to see where this wants to go from here. That's kind of the million-dollar question right now. Obviously, we got a set of numbers, and especially in the corn side, extremely friendly, big production cut. Most of the market didn't anticipate that, and that's the largest January production cut ever. So it really makes you scratch your head. Where is that coming from in that standpoint? So we'll have to see what they said the next couple of weeks brings us here, next couple of days brings us. Where does the money take this? How far does the money take this in terms of its money flow up in that position? Opportunity is here, though, for some producers. If you're still holding on to some bushels, you got some chances here. And I've been hearing in some areas the cash market really isn't following along as basis levels continue to turn a little more unfriendly, kind of absorbing some of the move, especially in the corn side. So, like I said, next couple of days will be kind of key. Soybeans, obviously the picture is improved, but still heavy. So we're watching that Argentina weather, and I think a lot of this has been tied to the 45Z proposals coming out in terms of that limitation on used cooking oil imports. We've seen that bean oil market explode, and that bean oil market, as well as soybean meal, which that joined the party a little bit today in terms of the buying strength, can really propel the soybean prices higher if those crush margins look a little more friendly.
Very true. Well, I want to talk a little bit about some of these numbers we got on the WASDE, and I wonder, in the case of ending stocks, John, and I'm pulling up on the video feed the numbers that we got on Friday. Are some of these stocks numbers getting a little snug in your opinion? What do you think?
We start getting corn around that 5.4. I mean, that puts stocks to use just a little bit above 10. So that, starts getting things a little bit more friendly in that regard. We're probably looking at where we kind of are, 470, 480, push to $5 type range on that type of a number. So again, with the price of corn where it is here, we're getting into that range that we probably need to be at, and given this price move, so we'll have to see. Soybean side 380, if that's still a couple 100 million bushels over top of last year. So again, that bean picture, even though it's improved and down quite a bit from the 470 or that we were back in the last month, again, things are still heavy overall, and still a potential record South American supply coming, and a global supply that's still going to be 10 to 15% above last year in terms of its above record pace. So, and then lastly, that wheat stockpile looks fairly straightforward considering where it's typically at. That really wasn't a report for wheat. It was more of a corn soybean report, even though we did see those winter wheat seeding acres that come in a little bit above expectations. But that wheat market sure kind of found a footing here today and pushed the double-digit gains.
I'll look at the quarterly grain stocks numbers too. We got those, of course, on Friday, and you think about some of the global aspects of this as well. Just a lot to take in, but I think, again, I reiterate my thoughts about this being a bit of a gift for producers, just with the way the markets have reacted here in the last two sessions. And of course, again, the corn and soybean yield cuts and more. It's just been it's been something that I think it needs to be potentially rewarded here, John.
It probably is. And again, there's some opportunities out there for producers to get some things going, maybe even kick in some 25 here. Still think about the big picture where you are, analyze the balance sheet, and go from there. One number that you showed there is that quarterly grain stocks for corn at 12.074 billion bushels. Let's look back to last year, and there's a couple things that are still kind of making me scratch my head. And part of me feels like maybe the USDA missed last year's numbers in terms of the crop. And if there was a weather year, we could have a reduced crop supply. That was probably last year. It's not saying that's the reason they made the cuts that they did. Obviously, we had the quick harvest, the dry weather at harvest that probably limited the finishing size end of that crop for this fall. But, quarterly grain stocks are only down 100 million bushels from last year. In this time window, last year we were at 12.174 billion. This year we're at obviously 12.074. So there's still a lot of corn out there. Again, when you look at the USDA balance sheet and that 1.54 billion bushels of carryover, that's their projection for where carryover is going to be at the end of the marketing year in September. So realistically, my gut's telling me right now that maybe this is the lowest number. And because now we can't change production until we get to grain stocks in September. So if demand slows down because of price, and that's my biggest concern here, is the fact that this rally since the August lows was built off of demand. Now we've got a nice peak in. We put a low in on the balance sheet. All of a sudden we see some sales start winding down. We got South American crops coming over the next 6 to 8 months. We're probably the only game town yet for a little bit longer here. But then eventually we could see those just sales start drying up. And all of a sudden we get to the March report and USDA takes 50 million off of demand because sales have slowed down. Next thing you know, we get to the 1st of August, we could see old crop back to 1.65, move 100 million bushels if the demand pace slows down. Throw in the fact that you got wheat trading at a very big discount to corn. So where's that come into play in terms of the feed demand side of it is that corn wheat spread, has really narrowed up over the last handful of sessions.
You mentioned basis not necessarily following here in the last couple of days. Look at futures on Monday's close. March corn 476.5. March soybeans 1053. Jan beans front month 1041. I just wonder here, John, are these some levels that need to be managed? The risk need to be managed here after 2 good up days? I mean, and what are your thoughts here, John?
When you get a market that spikes out like this, that usually unfortunately follows up with a spike down. So that's something we do need to be careful of here. If you're not making sales here, I'd definitely get some puts going underneath this market, especially on the corn side of the equation. The corn puts right now is extremely cheap. We've had a good run. The funds are holding a nice long position. Do they start ripping that back if they need to, especially if we get into the talk where, hey, we see acres coming or we see slower demand coming at us? These next couple of weeks in terms of export sales and things are going to be very, very key. Last week's sales were dismal at the 700,000 metric tons, well below expectations in terms of the low end of the range. And on that report, 6 different countries reduced their corn sales to the United States. None of them were big, 50,000, 20,000, 30,000, but you added it up, it turned into 3, 4, 500,000, that disappeared. Is that a trend we're going to continue to see? Is the little more confidence of a large South American crop coming this summer? So that's something we'll have to really watch for, is what happens in terms of those export sales. If we just start getting cold because we've priced ourselves out of the market, as we're talking about grains today, don't forget the US dollar did put in a new high again today in terms of it for this most recent move, finishing firmer. And that just makes things a little bit harder on a competitive front. Plus also when we talk about US producers selling, foreign producers are stepping up into the market. All of a sudden today we get a bid for corn from Brazil for February. That wasn't there last week, as they've now got some corn in the pipeline that can compete against us on the export front. So to me, there's risks out there for producers. Maybe we talk about the bean risks, which are still obviously well in front of this market. Now we've seen a move from realistically $1 from the most recent low in March. Probably a great window. If you don't want to make sales on it, let's make sure we got some defense going in, because that South American bean harvest, as well as that second crop corn harvest coming this summer, will all be parts of the play as we move forward.
And I think about this too. You mentioned the dollar. I'd have to think a headwind here. I mean, up 110 on Monday, yet Still seeing the good strength in grains. Eventually, I have to think the dollar catches up with us here, John.
I think that is a factor, and we'll start seeing that in the export sales front. You go start looking at bids as we move into the spring, mainly focusing on soybeans for this one. But right now, with the move today, as well as bean premiums continue to fall in Brazil, as Brazilian farmers were selling. In fact, they had their largest selling week in 10 weeks last week in terms of product getting moved into the system or getting locked in. We're looking at about a 90 cent to $1 per bushel difference between Brazilian beans and U.S. beans for the month of February. So those are things that make me worried that probably want to stay active on the cash market. You've got an opportunity to do that here. If you're not going to, great place to start thinking about floors, even floors into 25. I know everybody's hoping for a little more. I wanted to get started around 450, 460. Well, we're here, so I'm going to start thinking about some of those ideas and just start getting the toe in the water on new crop stuff as well. But again, you got an opportunity here in the old crop side. Obviously, if you're sitting on a basis contract that you get a price here at the end of February, probably a great window to start thinking about getting that done as well, so you don't get hung out to dry like we've seen the last couple of years with that February pricing window.
John Heimberg with Total Farm Marketing is our guest analyst here today on Market Talk. John, let's switch over, talk livestock trade. Down day in cattle futures, but I mean, considering how this market has been as of late, maybe a little bit of a price correction in futures was due here. I know more record highs in cash trade last week. This cattle market's just been smoking hot. It's been on fire. What's your perspective here as you take a look at cattle on Monday?
Realistically, the front end of the market, it was a consolidation day. We traded within Friday's range. So really nothing breaking technically one way or another. We didn't go to a new high and fall apart or take out last week's low and open up the door a little bit. We're just down today, for lack of a better way to describe it. Now, we'll have to see. This market might be in pause mode, grind a little bit this week, maybe get to Wednesday, start price, if retail values stay firm, a little softer at midday today, probably start pricing in possibly the next cash move if cash prices continue to want to trend higher, which I really don't have a whole lot of indicators saying they don't here. We did take April up. We poked at the $200 level on Friday last week before we kind of ran out of gas. Maybe we're just hitting that psychological barrier that's there. But I think if we get firmer cash traded, market's probably got some more room to go. So a couple other things too, watching feeder cattle index. That's been on red hot lately, did fall back on today's trade a little bit. So maybe that cash feeder market's getting closer to a top, especially if we do get those imports coming in from the Mexican cattle. USDA talked about doing that the week of the 20th, and they kind of pulled that back the next couple of days after that. So still trying to find some more confirmation about when that import ban could lift because of the screwworms issues. So those are some things that could be headwinds on this cattle market. Plus just the fact that I'm curious what commitment of traders will say today. They got to be pushing that length that we saw from back to 2019. So there's a lot of reasons this market could just fall apart on money flow triggered by a news event here or there. So again, I've been saying defensive, cautious this market for a long time. Still think puts are the place to be underneath cattle here. Not real sure you still want to have anything over the top that could limit you, such as a sold call or a hedge, in that regard. But at least still there's tons of value all the way out to April of 26 sitting here on the board that probably needs to be looked at some way or another, especially if you're picking up feeders at these price levels, that you better protect those margins that are out there if they're even there for some of these producers now, that especially if corn prices start to climb a little bit more.
And to that point, market, it could go up for so long and you kind of get lulled to sleep a little bit thinking that it's going to keep going higher and higher. But, as we know, John, markets go up, markets go down. And it seems like this cattle market has ran for so long that if you're not protecting yourself at this point, what are you doing? That's what it feels like to me, John.
Yeah, the risk is definitely out there at this time frame for the producer. So things take a look at.
Absolutely. Hogs, a good day there Monday. What's your feeling in this hog market to start the week?
Well, yeah, good day today. Good recovery the last couple of days. Again, that was a record long position. And, the funds bail out of that pretty quickly, and now we're snapping right back to it. So it's another market just like cattle. We still got some decent demand. We still just got some good money flow into it. We'll see where this wants to get to. It still feels like it's a market that's got a bit of a top, but over top of it here. But hey, let's go retest some upper levels. So I think next day or so could be key. Do we hold on to these gains here? Or are we hitting another peak point? With the funds holding that position, they are. Still thought we could get that Feb hog down to the 83 area, summer hogs down into the mid 90s. So just kind of holding out for that at this time frame. But we saw some pretty good money flow here these past couple of days. As the commodity space in general, you go look at the Bloomberg Commodity Index, it's had a heck of a move this last week. Obviously, that's led by strong cattle, the grain market move, and then we haven't touched on crude oil, the fact that we're pushing $79 a barrel on crude today with the combination of the Russian sanctions as well as the potential chatter on the news today of a ceasefire in Gaza between Hamas and Israel. All those things kind of come into this market here, and this crude oil market's feeling happy about things right now. And that's one thing that's lifted the commodity space in general. The big question is, President Trump's coming in on next Monday. The policies are going to be somewhat inflationary with tariffs and things of that nature? Is this market pricing some of that in here as well as, kind of the big overhead balloon that could be lifting things up here?
Very good point. Very good point. Final thoughts, John? Anything else you would share or reiterate with folks here today?
Again, markets give you opportunities, and here is one. If we're talking back in the 1st of August, how many people would kill to be selling in the 480, 490, type window for corn, or 1050 even again for beans, and here we are. So take advantage of those opportunities that are there. I know there's still not great numbers. Yes, we could still go higher, but make sure you're just managing your risk here, because again, when markets move this quickly, they usually come apart this quickly as well. As the money decides that this is the window we want to flip things over. And sometimes that can happen without a change in fundamentals just because the momentum changes. And that's something we got to watch for here.
John, if folks want to reach out to you and have a conversation there at Total Farm Marketing, how can they get in touch?
Sure. Just give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
Always good to chat. John Heimberg with Total Farm Marketing. Thanks for being with us here today on Market Talk. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.